price is in an uptrend going this way. You see price comes up, taps this EMA, goes long. Here price breaks both EMAs, it comes up, taps off it, drops. Comes up, taps off it, drops. Comes up, taps off it, drops. And why is this? Because EMA exponential moving averages are moving support and resistance zones. Matter of fact, I'm going to take a quick second and jump onto baby pips and show what an EMA is. Exponential averages. Exponential moving averages explained in baby pips. Boom. So as we said in the previous example or previous lesson, simple moving averages can be distorted with spikes. We'll start with an example. Let's say we plot a 5-period simple moving averages. Simple moving average on the daily chart of Euro USD. Boom. Okay, I'm gonna skip. Boom. It's called a exponential moving average. An exponential moving averages give more weight to the most recent periods. In our example above, the EMA would have put more weight on the price of the more recent days, which would be days 3, 4, and 5. This would mean that a spike on day 2 would be lesser value. Okay. Really quick, I'm gonna jump back because I feel like moving averages in general needs to be defined so that you can actually understand what an exponential moving average is compared to it. So moving averages are one of the most commonly used technical indicators. A moving average is simply a way to smooth out price fluctuations to help you distinguish between a typical price noise and the actual trend direction. By moving average, we mean that you're taking the average closing price of a currency pair for the last X number of periods. On this chart, it would look like this. So if I jump over to trading view, I have an exponential moving average of 50 and an exponential moving average of 200. So this means it takes an average of the price of the last 50 candles. That's what a moving average does, So by moving average, we mean we're taking the average closing price of a currency pair for the last X number of candles. So I have one that's taking the price of the last 50 and one taking the price of the last 200. As you can see, the moving average looks just like a squiggly line overlaid on the top of price. This type of technical indicator is called a chart overlay. And so if we jump over and get more specific with exponential moving averages, well, now there's the simple and there's the smooth and there's also the exponential, which differentiates itself by this definition, It gives more weight to the more recent. So with 50, I'd say maybe the last 25 or the last 15 or the last 10 candles would take the most weight within the price of the exponential moving average, which would give it a distorted view, and it'll smooth out the spikes that come from impulses that shouldn't be there, left by wicks. And so now, if I jump back here, we have the moving average or 200 exponent. We have the 200 EMA and the 50 EMA. And now what we want to do is really just let price come up, tap off of it, and then just short or long based on the trend. And so price came up here, tapped that, and now it's shorting off, or at least I'm expecting to. So I'm not going to use any fibs, any zones. EU, I know, going for about 20 pips, having a 20 pip stop to like a 50 pip stop is pretty good usually. So I'm gonna wait for it to come back up here, and I'm gonna give it I'll say 30 pip stop. Look, price came up, tapped the EMA again, shorted. Now I'm gonna wait for it to come up towards this EMA, and I'm gonna let it short. And one thing you can look at with this, a big key that you can trade off of, if I can find a good example, is an engulfing candle. Once it touches the EMA, you want to see an engulfing candle of the last one. So this is a prime example here. So you see it touches the EMA, and this candle here engulfs the previous candle and the other candle that came prior to that first one that touched the EMA. So this would be a really good signal to get in right here off the close of that candle. And if we zoom out, like say I went 30 pip stop, we could go for like 50 pip TP, 45. And so that's pretty much all we're trying to do right now, is just wait for it to pull up, touch the EMAs, and then short off. If it breaks the EMA, we want to wait for it to pull back, tap off it, and go again. So here price is pulling back up, and so we're going to start to look for zones where it might touch the EMA and short off. And so it still hasn't touched yet, so I'm not getting in. So boom, this is like a signal that we could get in for this short, because we also got this engulfing candle down. I'm gonna go down to the 15-minute real quick, and even then, I guess if we look at this time frame, I'd still want to go off this candle because of the engulfing. But we can put this at 25 pips because that's just above the previous high, and then just take this down for, I don't know, 50 pips. Seems good enough to me. So pulls back up to the top, and does it short off or does it go long? Boom. So here, just got in a little bit too early. Could have adjusted and waited for price to pull up higher and kind of retest this higher zone, but we didn't do that. But what's nice is we ended up stopping right here at a pretty primed point. It's kind of low, so I may not get into this, but just for purposes of what I was telling you, I guess I will. Also, this should be like that. But yeah, I'll go 30 pips, risk 15-ish. And look, see, that's another lesson right there. Should have let it come up and at least left my TP or my stop loss above the previous high. And even then, I could have let it come up and touch that EMA again. And I guess one thing that's going to come probably tomorrow is mixing EMA taps specifically with like supply and demand zones. So then like this is boom. If I get a supply and demand zone without an EMA tap, I don't take it. If I do, then I'm going to take it. But for now, I'm going to continue with just EMA taps. Just EMA taps. If I can get this box to get off here, thank you. Cool. So, didn't even get a tap, but I mean, it was good enough and close enough to where I probably should have just entered the short. Went for my 30 pips, put this above the previous high, about there. Cool. Now we're gonna wait, see what it does. If I don't get a tap, I don't get an entry. I don't get a tap, I don't get an entry. Jeez, no tap, no entry. It's the rule. And you can see, here's a key point to also key in on. I did not mean to open up the news app, but another key to key in on is you can see how all through this area price is not pulled back and touched either of these EMAs, which tells me we're going to need a big movement that's going to break these EMAs and start pushing price long, and then price can recover back down. But it has to come back up and touch the 200 EMA at some point. So I'm going to be looking for some reverse trend trades to try and get in. That'll allow me to capitalize on that movement that I need to expect. So I think it's probably starting right about now. So what I'm going to do, which is a little bit different than what I've been doing already, is I'm going to mark up this lower zone as a possible entry point for the long. And hopefully it turns out well. But from here, because I'm getting what I think I'm about to get, I'm about to take this short back to the zone. something like that. I mean, we can cheat on this and say I pretty much won this. I mean, it was very horrible and ugly, but oh well. But as you can see, just like I literally just called, because of price not having touched the EMA on the higher time frames, price had to turn around and pull back up to those. And so this is still so disappointing. Like, why didn't price recover far enough? But you can see, pull that right outside there. This is just a random snipe that I kind of just put together. And even then, price broke above, came back, touched the EMA, boom. And on the same note, I'm gonna still need to wait for it to come back and touch that EMA before I can look for another long. And so what are we doing? Where are we going? I think price is gonna pull back down and touch this lower EMA before going back up. Okay, we got a break on the 15. Okay, on the higher time frames, it's looking like it came, touched, maybe the 1 hour touched the 200 EMA. Oh, it broke. Okay, cool. So yeah, what I'm thinking is price is gonna pull back up to this higher EMA one more time on the 1 hour before shorting off again. But I guess this did just start a long trade. So I'm actually gonna keep my bias long, as hard as it is to say that. Let's see if it turns out in my favor. Nope. So that trade would have been bad, but I guess it's good that I waited. I just feel like on the 4 hour, it's still leaning too much for a long. I should just expect the long from here. But if we go to the 15 and we respect what we're supposed to do, then let's see where we're going next. Oh, I was right. We'll take this move up. Or not. I got so much confidence just to get blown out of the water right there. That is actually hilarious to me. And this trade over here would be entered now. I put that right around there. But on these lower time frames, now it's my time to really just wait for the short. And I'm guessing because of the supply zone, price is gonna hit this EMA around here. So that's kind of what I'm gonna bet on. And I'll just wait and see. Wow. That's disappointing to have lost in that type of way. But I guess it is. Oh, double bottom. Ew, I don't know. Price right now is in a really weird spot, but I'm gonna say that it's probably leaning more uptrend. So we're gonna play it off of that. So we're looking for longs now. 15-minute, see uptrend. Let's see where price hits this EMA. So somewhere around here should be my entry point on the pullback, and take it long or get stopped out again. I don't know why I'm getting caught on the wrong side of the market so many times. I guess it's just bad pullback time. But as I get on charts more, as I practice these things more, as I break it down in this way more, I'll get more accurate and just see it more, because I'm so used to having so many different confluences with me and on my trades that to not have them now is kind of weird. And like, look, that's the thing. I feel like one of the problems I'm facing right now is I'm getting caught trying to sell at the lows, expecting it to create lower lows, and I'm like trying to buy at the highs and expecting it to create higher highs. So I should be buying down here and then selling at the top. So if I were to buy down here, geez, that's a big ass trade. Boom, there we go. Now we hit TP and now we're in motion. So around this point, since we're getting to a high point, now we should start looking for shorts, and we should see and wait to see if it breaks this EMA. But as the short sets itself up, we should see pattern and formations that kind of signify something like this that says, hey, look at me, a short's here. And one thing, I'm going to try and take one from higher just in case, but I really think it is going to short off from here. So I'll take this short here. And one thing is, I know I should be looking for an EMA tab going long, but sometimes you just kind of have to trade based on what you know and what you've seen. And even then, I still get blown out of the water. How tragic. But this is actually frustrating. Just because of that trade right there, I am going to end this video. I'm going to come back soon here in like 20-30 minutes and get another one done. I just need to, you feel me, clear my mind, reset, and try and figure out why EMAs aren't working, because this was the basis of what I was trading. And maybe that's not why I'm not having as much success as I used to in the past. Maybe it's just not as usable as it used to be. And maybe I shouldn't rely on it.